What's up, everyone? My name is Ale. This is my world of stocks, and I've got a question for you. Are you brand new to stock market investing? Well, then you've come to the right place because today's video is specifically made for anyone that is brand new to stocks in 2024. Now, step one, the first thing you should do is consider subscribing to this channel because we make stocks related videos all the time and I think you'd benefit greatly from them. I'm also planning on making a lot more of new educational videos this year too that I think would help you out a lot as well. But for step two, all I want you to do is just sit back, relax, and enjoy this video because I'm going to guide you step by step into the world of stock market investing so that you can quickly get up and running and become a stock market investor today. So let's not waste any more time. Let's go ahead and jump straight into this. All right, now I'm gonna simplify all of this by breaking it down into 4 simple parts that are easy to understand, and I'll even put chapters down in the time bar for you in case you need to jump around too. But in part 1, we'll cover what stocks are, how they work, and what dividends are, and any other kind of beginner information that you might need to understand for the stock market. Once we have that foundation though, we're going to move on to part 2 and cover how to physically actually go about buying stocks for the first time. And don't worry, I'll guide you through that entire process as well. It's actually way easier than you might think, and it's also pretty fun too, so you're going to love it. Now, if you're still with me for part 3, then I'm going to teach you a little bit about investing strategy and what to look for in the market so that you're set up for consistent long-term success. Because really anyone can just buy into stocks, but I want you to actually achieve your goals here. So I'm going to show you the easiest and most realistic ways of going about that. And then finally for part 4, I'm just going to leave you with a couple of my favorite websites that I love to use every day for stock market investing and analysis that I think you'd benefit from too. So does all of that sound good? Are you excited? Then let's go ahead and jump straight into this, guys, and let's start with part 1. All right. So what are stocks anyway? Well, it's actually really simple. They're just ownership certificates that say you own a piece of a company. So you pay some money and in exchange you become part owner of Microsoft, Amazon, or whatever other company that you want to invest in. Now back in the day these would actually be physical pieces of paper, but these days it's all digital and done through a website or usually just an app on your phone. Now these investing platforms are what we call brokers, which are just companies that handle all of your stock investments. And while you could pay for certain types of services, these days there are plenty of free options that allow you to buy and sell stocks without paying any kind of transaction fees. My personal favorites are SoFi and Robinhood, which are free, and I use them all the time myself, but we'll come back to that in just a second for part 2 when I show you how to actually physically buy and sell stock. Now just to finish up with part 1 though, you would basically choose a company you like, invest in that company by buying the stock, and then if the company performs well by selling great products or services, then demand for the stock will go up in the market, which in turn allows you to sell that stock to another investor for a higher price than you paid, thus making you a nice profit. But on top of that, some stocks also pay a dividend, which is basically a reward that a company pays out to you for investing in their stock. And I love these because they're direct payments that go straight into your account, usually every quarter, that you can also use to reinvest into even more stocks and thus build your portfolio out even larger over time. And it's also great for beginners because of that as well. And I'll talk more about that in parts 3 and 4 when we look at strategy and some different websites to use. But for now, just know that all of these things that we've talked about so far are all going to be handled right inside of your investing app on your phone, which is super easy to use. So with that in mind, let's go ahead and move on to part 2 and talk about how to actually buy and sell stocks. All right, now when talking about brokers or investing platforms, there are many great options out there like E-Trade, Fidelity, Charles Schwab, and more. But like I said, my personal favorites are SoFi and Robinhood, which I also think are the best options for beginners because they have the most free features. They have really streamlined and buttery smooth apps that are very easy to use and understand, and they both offer fractional shares. Now, out of those two, I would probably say that SoFi is my favorite just because I really like how many different features it has and how it kind of integrates all of your finances into one place. But even if you just want to use it for investing in stocks or to get a free checking account or savings account, well, it does all of that perfectly. And we actually use SoFi here on the channel for our community portfolio as well, which is a brand new stock portfolio that I created from scratch, where I'm only allowed to spend $100 per month. It's kind of a budget portfolio, and I chose to use SoFi for that, and it's been a lot of fun. There's videos on in this channel if you want to check out any of those videos. It's easy to follow along with that portfolio, but we've been using SoFi for that, and it's been a great experience, no issues, and I really love it. So I think it's a great choice for beginners. But again, SoFi, Robinhood, great choices, either one. Now, I'm not sponsored by either of those companies directly, but I do have affiliate links for them down in the description. So if you do want to give either one of those a try, if you use my links, we would both get free stock for that. And you can actually try both if you just want to get some free stock on both platforms. But again, links are in the description if you do want to support the channel and use them, but you don't have to. You could just sign up on your own. Anyway, when you're actually ready to buy stock, all you'd have to do is sign up on one of these different apps, whichever one you choose to use, and you'll be asked to enter some personal information like a checking or savings account that you can use to transfer money into this new brokerage investing account that you're going to use to buy stocks. And by the way, the app will guide you through all of this, so don't stress out if anything sounds confusing. All you got to do is download the app. It's going to guide you step by step. You'll fill out some personal information, link your bank account, transfer some money, and then you're set up to actually go ahead and buy stock. Now, once you're all set up for that and you want to go ahead and start buying stock, all you have to do is search the name of a company that you like. So say Amazon or Google or whatever other company. Then you're going to click on that company and select buy. Now, if you already own the stock and you want to sell it, then you'll just click sell. But in this case, we'll pretend that you're buying the stock. Now, when you are actually buying a stock, you'll have two different options from here. So you can either purchase a stock using whole shares or using fractional shares. Now, the difference is, well, let me just explain what shares are first. So shares are basically just pieces of a stock. So say there's Amazon stock. Well, differently, smaller pieces of that would just be the shares. So say Amazon stock trades for $200 per share and you want to invest in Amazon stock using whole shares. So say you want to purchase 5 whole shares of Amazon stock. If they're worth $200 a piece, then you would end up spending $1,000 in total for those 5 shares of Amazon stock. However, you can also use fractional shares, which is awesome. I love using it myself because you can just enter any dollar amount you want and the platform will calculate and do all of the math for you using decimals and just give you smaller pieces of that stock. So say, for example, you only have $10, right? So you have a very small budget and you only want to spend $10 on Amazon stock. Well, you can just enter $10 and it'll just give you, let's see, if Amazon stock is trading for $200 per share, if you enter $10, that would be what, like 0.05, it'd be about 5% of one whole share. So I don't want to throw too much math at you guys. I don't want it to sound confusing. The difference is you can purchase stock using whole shares, or you can just enter any dollar amount and it'll give you whatever that's worth in the stock using smaller pieces, fractional shares. And again, I use fractional shares all the time. I love being able to just enter like $100 of Amazon stock and it would just give me that. And again, it's great for beginners too because you might be on a budget when you're first starting out. So you can just invest whatever you can afford and then slowly build up your portfolio that way using fractional shares. So it's a great tool. Highly recommend it. All right, guys. Now, if you're still with me, then I'm very proud of you, but let's not take our foot off the gas here. Let's go ahead and jump straight into part 3 now. And let's talk about stock market strategy and mindset so that I can set you up for long-term success. So let me just give you a few quick tips right off the bat for beginners, just kind of get you in that right mindset when looking at stocks. We'll kind of go from there. But tip number 1, I'm going to say invest in what you know. So are you a gamer? Consider looking at gaming stocks. Are you into tech? Check out some tech stocks. Are you into beauty, fashion, or makeup? Do you work in healthcare? Are you an engineer? Do you work in energy? Are you into cars? Check out those types of companies. Whatever it is, figure out what you're into, what you like, what you're passionate about. Because I promise you, if you, at least when we were first starting out, if you stick with companies that are easier for you to understand, then it's going to make it so much easier to not only find the best companies to invest in, but actually understand them and how they operate, the market that they're in, their competition, their financials, their performance, and everything else. It's going to minimize your mistakes and your risks, and it's going to help you invest in higher quality stocks when you're first starting out if you can actually understand them. And then later on, you can branch out a little bit too and take some higher risk. But for now, let's minimize that risk and let's invest in what we actually know. Okay, tip number 2. valuations matter. Now, I don't have enough time to dig all the way into this today, but I've put out several videos in the past. I'm going to make more here in the coming year on how to properly value a stock. So make sure you subscribe, or if not, just check out previous videos too. I've talked at length about this, but just know that valuations matter. And what we're talking about here is just to give you a quick example of this. One of the most popular valuation metrics for determining whether a stock is considered cheap or expensive is the price to earnings ratio. You've probably heard it before. It's called the PE ratio, and it tells you how expensive the stock is in relation to how profitable they are. And if they're not yet profitable, you can also use the PS ratio, price to sales, which will use sales instead of earnings to make that calculation as well. And if you stick around with me for a little bit longer, in part 4, I'll show you some different websites for actually looking at those valuation metrics and analyzing them. But for now, just know that valuations matter. It matters how expensive or cheap a stock is. Like I said, you can check out other videos on that too. But that's tip number 2 for now. Tip number 3, invest long term. And I know that there's a ton of stock trading gurus out there on the internet, and especially here on YouTube, that will promise you that you'll become a millionaire if you just sign up for their program that involves trading in and out of stocks every day and making huge profits. But the truth is that if it was that easy, all of these people would already be rich and they wouldn't be wasting their time trying to get you to sign up for their program. Being a successful short-term trader on a consistent basis is extremely rare. In fact, I've never even met one myself, but I have met tons of successful long-term investors that do their research, they do their homework, they put in the effort, and they choose solid companies to invest in long-term. And you don't even have to take my word for it. Just look at the wealthiest people in the world that either started or invested in companies that they held on to long term, like Elon Musk with Tesla, Bill Gates with Microsoft, Jeff Bezos with Amazon, Warren Buffett with Coca-Cola, Apple, and many more, and other investors like him, like Ray Dalio, Stephen Cohen, and tons of other examples out there. So just know that these are all long-term minded investors. And if you're a beginner, my advice is that you should be a long-term investor too. It's what I am, and it's what I've seen success with. Not so much with the short-term trading in and out of stocks on a frequent basis. I see a lot of mistakes being made there, a lot of people losing a lot of money. So I would avoid that, but that's just me. Anyway, tip number 4, structure and diversify your portfolio. This is very important. Now, it's going to take some time, but as you build your portfolio out larger, make sure that you're making sound, logical investments across different markets and sectors, and then structure all of that accordingly into a well-diversified portfolio for the long term. Now, I've also made several videos on this topic too. In fact, I recently just put out my entire portfolio if you want to watch that to at least get some ideas for you, kind of kickstart some ideas. But just to kind of summarize it for you, I generally have over half of it in core foundational stocks, which are very large and dominant companies that I strongly believe in long term, like Google, Amazon, Microsoft, Visa, stuff like that. Then I have more than a third of my portfolio in dividend focused stocks, because that's a great way of building your portfolio out larger over time, getting gains from both the stock price and the dividend. And here I have stocks like Medtronic, Verizon, PepsiCo, Chase, and more that just have great yields and can help me build out my portfolio over time by giving me those dividend rewards as well. Then I have less than 10% each in foreign international stocks and speculative higher risk, high reward types of stocks too. But in all, there's just a ton of different stocks in my portfolio, probably too many, but I like to have many different stocks spread out across tech and healthcare and finance and biotech and consumer staples, artificial intelligence, telecom, everything else. You get the idea. I like to have many different types of stocks, growth, value, different risk levels, dividend stocks, all that kind of stuff. I like to spread it out. And I'm not saying that you have to start off like that right off the bat. I'm just saying that over time, it's good to set a goal to kind of work towards of diversifying your portfolio into several different areas, because it will actually help minimize the risk and the impact of any mistakes that you make on individual stocks. And it'll just kind of help you sleep better at night, knowing that you own many different stocks, as opposed to having all of your money in just one basket or just one stock. If you put all your money into just Tesla, you're going to be going to sleep at night like, just praying that Tesla doesn't screw something up and cause the stock to crash, right? So you want to have your portfolio diversified into several different stocks so that you minimize the risk a little bit too. And finally, guys, tip number 5, I'm going to say have fun. Don't ever forget that, because I can tell you from firsthand experience that if you take this too seriously, you allow yourself to get too stressed out instead of actually having fun, enjoying the process, then you're going to be less likely to do the research, do the homework, or to even hold on to your investments long term. You might actually end up panicking, selling early, or at the wrong time. That can be devastating to your portfolio. So just take a breath. Even if you make mistakes, it's fine. Relax, enjoy the process. Remember, stocks are one of the greatest inventions in history because it allows little people like you and me to actually become part owners of giant corporations like Amazon or Google or Microsoft, and that's something to be proud of. So be proud of yourself, enjoy the process, and stick to your investing principles long term and have fun along the way. It's going to be a great experience. All right, guys, now if you made it this far, then I'm super proud of you. But let me just go ahead and wrap all of this up with a few of my personal favorite websites that I think can help you out on your journey too. And by the way, I'm not sponsored by any of these companies. I just like using them myself. But website number one, yahoofinance.com. You go there and you're going to have pretty much everything that you need in one place. You've got your summary page with a bunch of links for news and analysis of a particular stock. In this example, we'll just use Microsoft. But you can also click on other tabs like chart, statistics, financials, and analysis to get even more useful data and features like various charts, all kinds of valuation metrics like the PE and PS ratios that we talked about earlier. You can get income statements, balance sheets, and cash flow statements to analyze how the company is performing every year. You can scroll down to see how they perform against analyst estimates, as well as their sales and profits put into a simple bar graph for some quick analysis too. And you can even go to the analysis tab to see what analysts are projecting for the years ahead. For example, Microsoft is projected to still grow sales by close to 15% in each of the next 2 years, despite already doing well over $200 billion per year. How crazy is that? Microsoft just truly one of the best run companies in the entire world. And if you scroll down there too, you can also get some analyst price targets as well and other useful information. But going to website number two, that'll be seekingalpha.com. One of my favorites for news, analysis, dividend coverage, and especially valuations. Now in the news section, you get coverage from the site itself, as well as different independent contributors that can give you more perspectives and analysis on a stock. I love reading through those. You can also head over to the dividend section. I love using this one for just a quick summary of things like the current yield, which is the percent that you get back from your investment every year. That's the yield. It's very important for dividends. You always want to be looking for a good yield there. Higher, the better. There's also the annual payout, which is the dollar amount that they pay per share. The payout ratio, which is how much the company is paying out from their profits. The lower the number, the better there, because it'll be more sustainable. There's the 5-year growth rate, which you want a higher number here because it's how much they're increasing that dividend over time. And then the dividend growth history is how much consecutive years they've increased that dividend over time. So again, the higher the better there too. And then if you click on the valuation tab, you not only get all of these great valuation metrics, but it also shows you how they compare to the sector median and the stock's own 5-year average, which is a great way of checking how expensive a stock is compared to that. Which in this case, Microsoft is pretty expensive by comparison. However, it's also because Microsoft is just really such an amazingly strong company that it's a bit of a you get what you pay for type of situation there. But other stocks can be much cheaper or undervalued, so you just have to look on them on a stock by stock basis. But then finally, one of my absolute favorite newest websites that I've been using a lot lately is financecharts.com, which not only creates useful charts for pretty much any metric that you want to analyze for a stock, but it also gives you a ton of other useful information, just like the previous two websites, including their dividend, the financials, the valuation, and news too. And there's even this really cool kind of bulls versus bears section that gathers together a bunch of different pros and cons about a particular stock. So just a great way of getting some really quick insight into any stock that you're looking up. But yeah, there you have it, guys. I think that this is a great place to start here, and I just want to leave you with this. You're new, you're a beginner, and you're going to be making mistakes, and that's okay. Only invest with money that you can afford to spend or even lose. But stick with it, and over time, you'll get better. And hey, if you ever have any questions or need any help, come by this channel, drop a comment here or any other video. We have a great community here that is always willing to help. I'd love to help you out too myself. So feel free to stop by anytime. But thanks for watching this video. And if you enjoyed it, if you don't mind supporting the channel, then please consider hitting that like button because it really helps me out a lot. But thanks again, my friends. I hope you're all doing well, and I wish you the best of luck on your investing journey. And I will catch you in the next video. I hope to see you there, but I'll see you in the next one. All right, take care. Bye-bye.